How's everything going with you otherwise, Josh, trading wise and life wise? Any traveling? I remember you were traveling before last time we
Yeah,
spoke.
I went to Japan. That was honestly amazing. It really was. I enjoyed Japan greatly. The people there are just they're so different than the United States in a good way. Um, Everyone's just so welcoming, very hospitable. Um, they're just I don't know. It's like a different. It's almost like you like question what Americans really like feel and think. It's like the whole culture of being like let's call it I don't know, like very like self-motivated, right? Not necessarily like giving to a lot of people. I think it's rare to see in the United States. And
Hmm.
it's kind of the complete opposite when I was in Japan. Like anyone that you talk to, it doesn't matter if they were in like working as like in a restaurant or a hotel, like even people on the street, like random people, you ask them anything and they just give you like the sense of respect that like I just feel like in America it's not the same. And that's something that I really enjoyed greatly. Um, Yeah, I would say that the culture there is just I enjoyed it. Like that's overall that I would say. The food there is incredible. Um, that was like 80% of the reason why I went there,
Hmm.
in full
Nice,
honesty.
nice,
I had a good chance to eat some like Kobe beef and
nice.
some other like regional beef. I know a lot of
Mhm.
people like know Kobe beef or like Wagyu as like they're like
Yeah.
top tier, which it
Mhm.
is, but there's like certain regions that are actually in Japan that they actually I don't know how to say this in a nicer way, but they kill less like cows than Kobe beef, so it's even like more prestigious, but it doesn't have that same let's call it like recognition, but it's also still like
Right.
incredibly good.
So it's like
So
rare, very
yeah,
rare.
yeah,
Yeah,
yeah, exactly.
for
Like they
sure.
were saying that Kobe beef, I think there's only like 4,000 cows that are able to be like qualified or like
Wow.
basically like harvested.
Hmm.
And then some of this other region stuff that we had was like 2,500, like 2,000 cows, which I was like, whoa, that's
Wow.
like, yeah. And they just care
Crazy.
for the animals like very, very well. So
For
it's
sure.
always,
I think it's important to travel if you can. I mean, I'm not sure everybody's able to do something like that. But the more you expose yourself into other areas in the world, I mean, completely different walks of life. You know, everything's like the culture is different, right? 100% culture is obviously going to be different. But then also, like social norms and etiquettes and things like that, you really start to have your eyes opened as to how big the world really is and how unique all of us really are, even though we're one and the same kind of thing. But that's awesome, man. Any other
yeah.
places you're planning on traveling, or?
I want to be able to go to Australia, but that's like I want to knock out all the like the longest flights first, if
Yeah,
that
yeah.
makes sense. Because like as I get
100%, yeah.
older, I probably won't be able to
Yep.
to take that. So like I was one just to basically take some melatonin and just sleep, and like
Yeah,
that was probably the best decision I made because being on a plane for 14 hours if you're awake or
yeah.
trying to do something else, like it's definitely
Oh,
kind
it's
of miserable.
crazy. Yeah, when I went to Thailand a couple years ago, or last year actually, that was such a long, long commute. Um, I can't sleep on planes either. So
Really?
I was just trying to like line up movies, read books, that kind of stuff. But uh, I guess melatonin would be the next best thing to do. Just pop something.
Yeah. It's
Yeah.
still
So
natural. I mean, your body
yeah, that's
creates
true.
it anyway,
Yeah.
so it's not like it's
Yep.
a quote drug. It's drug free. So
That's good
it's
to hear.
yeah.
Well, that's actually a good thing to kind of talk about because I think with trading, a lot of what we're going to talk about today is like a big chunk is like mindset stuff, but
Love
just
that.
got to say, like, I think the day I went sober, no drinking, no smoking, no drugs, like nothing. The amount of clarity I got was just like on a completely different level. And I think when you tie in the trading aspect to things because of how you know grueling trading can be, um, if you have like some of these vices, you'll end up kind of not how to explain this. You're gonna start bypassing. like things that you need to kind of work on in like within yourself. And I think that's something I noticed. For at least I'll speak for myself because a lot of times if like let's say you have you know like you make a big mistake or you FOMO entry in or something like that, and then you get a stop loss and you screwed up. Like
Hmm.
if you have some sort of an addiction or like a vice, like you're immediately going to go to that, right? And I understand, based off where people are, yeah, drinking's part of the culture or whatnot, and there's no judgment about this. It's just personal preference, but I feel just from my own perspective that the moment I eliminated all of that stuff because I've had it. I'll be honest with you guys. Like I had an addiction issue. I probably had it since I was like a teenager, just based off where I was living. But I didn't recognize it until maybe within the past 5 years. So I mean, it wasn't even that long ago. But like I said, the clarity and the ability to like recognize, opportunities to grow. You just see things a lot more vividly. But like I said, no judgment here. It's just my own perspective, and you know, it is what it is. So yeah,
Yeah, I mean that mental clarity is definitely something that I think everybody should be able to at least like feel, right?
yeah,
But again, culture is culture, and changing people
yeah.
is a
Like
little bit more.
if I went to England and someone was buying me a drink and I don't drink, so I would be like, I don't drink. Man, I know I'm gonna get ridiculed in the whole bar. Like, you know what I mean? Because I know that it's like such a big thing there. At least with my family out in England, it was always like, you have to have a beer. So it's kind of funny that way. But so yeah, just let me know when we can start and let's do this.
Yeah, I mean it's
Okay,
all on you. We definitely got some more people in the audience,
perfect.
so yeah. If you
Oh,
guys
first
don't
off,
know,
oh,
yeah,
sorry,
Kira,
go.
go ahead and let them know who you are. You're the man, the myth, the legend, bro. Here we go.
Just a person, man. First
All right.
off, yeah, Josh and Toodegrees too. Thank you so much for having me on the live stream today. I haven't been here in a couple months, but just been working away on the charts and trading and just head down kind of thing. Appreciate everyone also being here today in the audience. This will be recorded, so shout out to Nate, aka White Chocolate, for helping me out there. And then we'll post the video later, probably later sometime this week. But today, the topic of conversation. Well, I mean, I'm Trader Xkira. You can catch me on Twitter, Instagram, all that kind of stuff. Today, the conversation is. I got a lot of things to talk about, but we'll try to get through it. I usually kind of jam a lot of stuff in when I'm here, but I kind of go with the flow with things that I feel leading up to one of these kinds of live streams, and I talk about it, and a big chunk of it was mindset, believe it or not. And so our agenda today, first off, we're going to talk about a little bit about Bitcoin. I'm not sure if we have any crypto traders here or holders, but this cycle has been insanely grueling, um, and a bit confusing just because of the way altcoins have performed. The next uh, couple topics to discuss are something I'm just going to refer to like fix this and win, and it's something that I think is the edge for 2026. If I was to try to pinpoint something, at least for myself, I also want to talk about some hidden truths about prop firms and how it kind of ties into the mindset piece because we do leverage prop firms to secure payment, right? Like withdrawals or to trade. Versus using like a cash account. So then there's a few other topics here like trader discovery and a couple groups. It's all tied into this one massive overarching topic, which is about fixing this. Um, and then we'll have some final takeaways and then my contacts right then. But let's talk about Bitcoin first. And if anyone has questions, feel free to drop it in the chat like at any time. It could be about anything. I wanted to talk about Bitcoin first. I also took a couple trades today. I wanted to kind of talk about that as well, like how I trade. I have made note about this in the past, but I've spent a lot of time fine tuning this, like the way I trade. I kind of reverse engineer things a little bit. But let's talk about Bitcoin first. Um, I guess the big question is, you know, is the top in, right? So when we look at this chart, the lows were put in 2022, and from top to bottom up to about $126,000, I think we did about a 7x roughly, which is pretty damn good if you think about it. The problem with this is that altcoins have not really done much, so it's been very hard to like understand where we are in the cycle. So there's a couple of ways I'm going to look at this. Okay, the first thing we're going to do is just obviously look at the Bitcoin chart itself. So if we consider the concepts which I've talked about in previous live streams, the four-year cycle theory, which I'm sure most of you might know about, and if you don't know about it, it's just centered around the halving. It's usually, like a 2.5 years bull cycle, and then a year from the top to the bottom is usually the cycle low, and then it kind of goes on and repeats. So this line here, these dotted lines are the halving, and then this is kind of like our take profit time zone, like a goalpost. You can see all the way from 2014. This is the 2018 high. This is the 2021 high, and then here we are right now. So from a time perspective, we've hit that goalpost, and it was something I was watching this whole time and just waiting for. So that's the first thing. If we're trying to figure out if the top is in, well, from a time perspective, if the cycles are going to continue, then I would say yes, the top is in. Do I personally believe the top is in? You know what? I'm extremely conflicted just because of the performance of the altcoins. And also just looking at ideas such as fear and greed index being literally a panic or like absolute extreme fear while prices at the top here. These are things that don't really correlate. Usually we get euphoria and marking cycle tops and extreme panic marking cycle lows, right? So we're not getting that. If I think about the Coinbase app on the Apple Store, I think like right now it's like ranked in over 300th place, which is unheard of, because if there's usually like cycle highs, cycle tops, that app is usually in the top 10. That's showing that there's retail euphoria and involvement, which once again we're not seeing. So time wise, I see this. Now let's also look at just like technical stuff, right? Why I think maybe it's not in. So I'll show you this chart. Let me close this thing off here. So I'm just going to go back to a couple of things I noticed, and this is just from my own studying, but when I was observing kind of like where when we had price starting to make these aggressive moves, basically break of structure, right? What I noticed was if we were to run like Fibonacci, just basic OTE type stuff, it really did show us where these tops are, right? So back in the 2014 run, we have a nice expansion move and then a retracement back into OTE, and then here's minus 2.7, and then here's minus 6.2. Sure, it did go higher, but that's fine. We're not trying to aim for absolute perfection. If we once again measure a swing point, and the way I kind of measure anchor or Fibonacci itself, like I don't actually use the entire range. I'll use the most recent swing, in this case because we're trying to look for extensions. I'll use the most recent swing low that is below where the sweeping of the price is. So if this price action had swept lower, then I would just use a different anchor lower. But if I just use this and I anchor from the top here, once again, OTE gets tagged, right? And sure enough, if we look for our target, here's our minus 6.2. Okay, so that's the second cycle. Here's the third cycle. So once again, this is exactly what I was talking about with the anchoring, right? So initially I had anchored here, and then once we got this massive crash, I lowered the anchor to here, right? So if the price had actually broken below here, I would just move my anchor lower. The thing is, I'm not trying to take longs from these positions. I'm just analyzing it to understand extensions. So once again, break of structure. This is the 2017 bull cycle high. Here's the low. We're back deep into OTE, right? And if we look at where the minus 2.7 and the minus 6.2 are, once again, it's literally marking a top. So we rinse and repeat the same idea again, and this is why I'm just kind of confused, because time-wise we've hit a goalpost, but if I'm even looking at something like this, where we anchor the same concepts, OTE gets tagged, marks the cycle low, and then sure enough, here we're having a beautiful reaction off the minus 2.7, but here's minus 6.2. Now, am I saying that we're going to hit $230,000 per Bitcoin? I have no idea. I'm just showing you extensions that have played out in the previous cycles. And if something isn't broke, why fix it, right? So I'm just going to wait and see what happens next. So that's one perspective to think about in terms of understanding if the bull cycle is over. I do want to also say now, like, let's look at the where are we here? Just close off some of this stuff for a sec. So if we consider just like market structure, right? So when we're looking at like unicorns, or if we start to usher in the ideas of ICT, okay, when we're looking at that, we obviously look for higher time frame liquidity sweeps, right? Which we get here. Then we're also looking for changes state of deliveries. So you get the sweep. Here's your changes state of delivery, right? And we obviously can use things like standard deviations. So if I use standard divs, and I would use for me, like, I know some people will measure it from the like in this case, because we're trying to figure out how low price is going to go. Some people will anchor it off the change state delivery. I personally, just because of how I learned how to use standard deviations, was that I would use the breaker block. So if I'm looking at where the breaker block is, to me, this is where the breaker block is, which I'll mark. Now, there's no unicorn here, but it's still a breaker block. I find that there's pretty good respect with breaker blocks, to be honest with you, versus using the CISD. But I mean, either or, whatever works best for you. But for me, I've just been finding it's a lot cleaner. Things line up properly. So if I'm looking at this with standard deviations, right? Here's our -1, and then here's our -2. And the thing is, like, -2 is nicely tied to $74,500. This is a weekly ERL, right? So we know that there's a lot of liquidity here that potentially could get swept, right? So we also know that there is a bullish FVG in play right now. And if you look at what's happening, price is continuing to close inside of it as it did last week. We're going to know in 5 days what happens here. One thing I talk about inside of the other discords I'm in, like Unicorn University or AshCap, is that like looking at FVGs and the EQs or the CEs, whatever you want to call it. Usually, we want to see price like reclaim or hold the CE of that FVG to show strength. But seeing that price is actually like close below it, that's kind of like a flag to me that there is a possibility that we are going to go lower. Now, is this a bear market? I mean, if we're looking at this purely as like market structure, then I mean, we can see how the ICT concepts play out, right? Like, it's pretty much clockwork with things that we would trade, say, with like NQ on the 1 minute time frame. Like, these are a lot of the same principles, because these kinds of concepts are fractal, right, with price. So if I'm trying to figure out like where are we going to go next, well, we need to see if price is going to actually hold this level and then push higher. Because we could see like a dead cat or dead cat bounce, right? Like a rally back into like a bearish FEG here, for example, right? We don't know what's going to happen. Bitcoin's also a bit unpredictable, where we don't know if like some sort of news will impact the price, and the next thing you know, price just goes with a V-shaped recovery and does something that nobody can think about. But if we're looking at, once again, from technical perspectives, I mean, even down here, right? We know there's an ERL here, but we also have like an order block, right? If we want to, even some people use order blocks. Like, there's an order block here, and you also have a move from down here where we had a liquidity sweep, change state of delivery. Like, what does the standard div look from here? And sure enough, it did mark -2, -2.5, and you're getting that reaction. So if we're trying to identify this move, it played out pretty good. The reason I'm showing this is just to show how ICT concepts, even the most basic ICT concepts, can actually benefit you in understanding crypto on higher time frames, on lower time frames. It doesn't matter. Is it always going to work? Of course not. But the key is the probability, right? So I think crypto and Bitcoin specifically is entering a very, very key spot. It's kind of like a make or break. But if I was looking at this in terms of market structure, there's a lot telling us that the top could be in, even though the euphoria aspect's not there. The other thing to look at is something called the 50-week moving average. The 50-week exponential moving average, EMA. There's a lot of conversation about the 50 EMA on the weekly being kind of like a line in the sand, like a make or break, because if you look back in time, and we're going all the way back here, that 50 EMA has literally held up the bull run, right? And the second it's lost, we enter bear market territory, right? This is way clear, right? Just a nice rally. The second we lose it, and it's game over, right? Here's another rally. Even when price back in 2021 had that massive crash, it still reclaimed that support, pushed higher. But ultimately, once it lost it again, bear market. So here we are now, and it's had multiple touches, and now we're back underneath it. So the question is, are we going to see like an underside rejection into that weekly bearish FEG? Right here. Let's mark it red. Right? See how it's curling over? Are we going to see it hit that and essentially roll over some more? Or are we going to see it reclaim it and start to make a new high, and then thus breaking the 4-year cycle theory, pushing us into potentially a 5-year model? Or it's hard to say. But Bitcoin, once again, if I'm looking at this using ICT concepts, it's not looking good. But once again, it hit that time goalpost. So we're going to have to just wait and see what happens. Now, if we're looking at altcoins, altcoins have just been completely obliterated for the most part. Let's take a look at XRP, for example. So with XRP, yeah, there's a massive run that has happened, but we are starting to see price roll over. And on October 10th, there was this, I don't know what the hell happened. There was a absolutely epic crash. I'm not sure if anyone was looking at their phone at that time. I was out at the mall with my family, and my phone just started lighting up with alerts, and I was like, what the hell's going on? And to see that price literally dumped like 53% on XRP. We're talking that dump happened within 15 minutes. I've never seen anything like that before. And it sure got bought back up because a lot of people had stink bids in. But what you're starting to see is price starting to roll over, and ultimately filling that wick. Right now, XRP 53% wasn't that bad. There was others where it dropped horrendous. So some of these stronger assets, did okay for the most part. But there's a lot of other assets that just absolutely got crushed. Let me see if I can find one. Let's take a look at Teo, for example. Teo's pretty strong, AI-driven coin. This had almost a 70% drop, right? So all I'm trying to say is altcoins are not doing what we have seen them do in previous cycles. Meanwhile, Bitcoin did what it's supposed to do and what we have seen, right? Exactly, Josh. It's huge liquidation, man. Just double checking the chat. Probably random says I do the same with the breaker, standard deviation, or the last swing that initiates the reversal to build the standard. Yep, 2.33. Yep. Profile targets off this. Yep. Yeah, there's different levels you can use. I've seen, when I was studying Poison, who's I'm sure everyone knows who that is. I know he was using with the liquidity depth pro indicator. I know he was using the I think it's 1.33 and 1.66. And I was playing around with those levels too, and they're pretty good. So yeah, I do see that recognition with the 3-3 there. So it just got me thinking about poison. So yeah, just going back to Bitcoin once again. We talked about the Fourier cycle theory. We talked about the 50 EMA being lost, standard divs, change state of delivery. Price ran 7x. I mean, there's not much else to say except Bitcoin looks like it's topped. The other thing now to look at is Bitcoin dominance, right? A lot of people have used Bitcoin dominance to help guide them to understand like what's happening, right? Because usually when we have like an alt season, we see uh, I mean, the dominance is never at 60%, right? The dominance is dumping into the 40s, right? It's similar to like what we have here, right? So this is 2021. The cycle high ended up around October-ish or so. So we're in the 40% range. Bitcoin dominance is like into the 60s. It's absolutely nuts. That makes no sense. However, the dominance does look like it's rolling over. So there's a lot of things that are happening that are not similar to like what we've seen in the past. USDT dominance, which is basically Tether. The idea here is if money is moving into Tether, it's moving out of crypto. So people are selling. That means this dominance is going to go higher. When this goes lower, it's the opposite, right? It means people are in altcoins or Bitcoin and money is moving into position. So what we want to see if there's any, some sort of like an alt rally or things like that is we want to see dominance start to reject, right? So if I just make a quick range here, let me use this. And if we just if we look at this range, here's the CE or EQ of the range. Let me just double check that this is tagged off. Okay, there we go. So here's the EQ of the range, right? Price is pushing above it, but this could be like a manipulation. And then if we also consider like, the concepts of like, just basic support and resistance, we have a nice range that's forming here, right? It's pretty obvious. So like, are we going to see a rejection here? What we don't want to see is dominance flip this thing. Because if this happens, I mean, that's 100% telling us that alt season's not happening. What we want to see is the opposite, right? We want to see price do this. Or I say price, but we want to see that dominance reject and continue lower. Because if this lowers, and dominance also lowers for Bitcoin, like the BTC dominance, then that's really good for altcoins. So we're going to wait and see what happens there. If anyone has questions about that, feel free to drop in the chat. I noticed someone said, please don't trade ICT on crypto, SMH. I mean, truth be told, like when I first started learning about crypto and how to trade it, I literally traded it like how everyone else traded it, right? And how did I trade it? Well, there's two ways. Like, let me open up, let me put the Bitcoin chart on for a sec. Like, how was I trading crypto? Well, it was literally trend lines, right? Like, if I saw a trend line, that's how I was trading it. If I was trading retail patterns, I was looking at like bull flags and bear flags. I think the key thing with ICT, which I learned through Ash Trades and just been studying my ass off about it. I've also learned from other awesome people. Like I've learned from Josh with the market maker model. He's got awesome videos on YouTube about that. And some other people too. The concepts do help me read the price action better, even with crypto. Does it always respect it? No. I think that's one of the bigger differences, that crypto is a little bit more volatile that way and a little less trustworthy. However, with that being said, I just want to make note that I do trade Bitcoin with ICT concepts, okay? And I'll show you what I mean. Now I trade this using the H4 and the 15. I wasn't going to go into this, but I just saw that comment. I thought, oh, you know what? Let me go into it. And I just want to show you what I mean. So like I use H4 IRL and ERLs, and then I look for the similar concepts like that we, have all studied and learned from the 2022 model, right? Which is a turtle soup, a chain state delivery. I know with 2022 model, there's also potential for OTE, or there's potential for like an FEG entry on the other side. I'm not looking for that kind of stuff specifically, but I am looking for like a liquidity sweep and a chain state delivery. And the other thing I really look for is SSMT or SMT. And if I don't really see it, I don't enter. So like if I'm looking at Bitcoin right now, like I was watching this position, but I didn't enter because there was no SMT for me, right? Everything was pretty correlated. So what am I using against Bitcoin? Ethereum and Solana, basically. Both are not showing me any sort of crack. So sometimes I'm gonna have these setups play out and they're gonna work out, but I won't be in them because I don't see that final piece of criteria that I need. And we're gonna talk about that with the mindset stuff in a bit. But like if we were to look, say like down here, for example, it's the same setup, right? Liquidity sweep, chain state delivery, price goes higher. The only difference is there's SSMT here, right? Or SMT, however you want to trade it. I like using SSMT, which is basically just anchoring swing points off of quarterly theory levels. But you can see here that Bitcoin makes a lower low, Solana makes a higher low, right? I'm not sure if ETH did the same thing, but ETH did not do the same thing. So Solana did the same thing. Or sorry, Solana did the opposite. So point of my story is I put those concepts together and I take that trade. I also use the EMA to kind of give me, this is the 20 EMA, just to give me a little bit more reassurance on the setup besides just using the chain state delivery. But I did take a trade on this and I took it up, posted inside of Unicorn University and AshCap. But once again, this trade setup, just watching it, it doesn't fit. Like I'm missing the SSMT side of things, so I'm going to stay out. But yeah, I mean, to each their own, right? I mean, I know that there's. I think when I started learning about ICT, there was a lot of like high and mighty type stuff about it. Like almost, it's almost like I don't want to say it's like snobbish behavior, but I was just kind of like, whoa, like it's pretty intense with people. Like it's like like messing with someone's religion. And I don't take it that seriously. But like Josh said, man, like if they don't work for you, then that's on you, right? Like if the whole key here is trying to be profitable by any means necessary, right? You don't have to do what other people are doing. You got to do what's best for you. If that's trend lines, then that's best for you, right? If that's horizontal support lines and resistance, if that's footprints, volume profiles, and delta, like great. Whatever it is that makes sense to you and basically puts you in the right side of things, like that's where you go, right? I think the volume profile stuff, and if even if we look at like Wyckoff, which if someone who's new to trading looks at Wyckoff, like it's super complicated, right? But when I started learning about the market maker model, Wyckoff actually made a lot more sense to me, believe it or not. And I think there's nothing wrong with trying to study and learn as many concepts as possible. But the thing is, at the same time, you don't want to have like information overload, right? Because then what happens is you start to confuse yourself with this concept and that concept, because some of those concepts don't actually align with one another. They kind of work against each other. So just be mindful of the information you know you absorb, and then be really mindful of the type of information that you then try to apply to the chart, because less is more, in my opinion. So always look for the most simplest approach. And like I said, just put like 2 to 5 concepts together. That's what I did with my futures trading, which we'll talk about now. And I just kind of reverse engineered a setup for myself. So like, I'll show you exactly what I do. We're just going to switch gears here. Essentially, today on NQ, I took a loss, and then I took a win on CL. We'll quickly talk about the loss on NQ, and then I'll show you the win. So the loss came from the morning. I was looking for, so what I do typically in the morning when I show up to the chart is I look to see if price is trading above or below 7:30 and midnight. This is how I form a bias, believe it or not. I've been trying to find mechanical ways to do this. When I started learning about bias through Ash Trades, it was IRL to ERL, ERL to IRL on a higher time frame. But I used to see price sometimes do the opposite of what I thought was going to happen, and then I would be on the wrong side of the bias. And I was early in my trading career too with like futures, and like it would really piss me off. So I spent a lot of time up until even this year, and I stumbled upon midnight and 7:30 opens, and simply just if price is above these two levels, I'm looking to short. If price is below these levels, my bias is to go long. It's literally that mechanically simple. And what that does is, it pushes me to trade the extremes of that range. So the wider apart these two are, that really pushes me to the extremes. When they're started to get really close like this, obviously it's not pushing me to the extremes, right? But I have to be very careful. But this is where I start to use, higher time frame POI levels. So what are those levels? They could be H4 ERLs. They could be H1 ERLs. I don't use I don't use FEGs like IRLs. I only use ERLs. I only want horizontal levels like that are definitive in the like lines in the sand. So I'll use H4 levels, H1 levels. I'll also use London and Asia session highs and lows. And then you'll also notice on my chart that I also have previous daily high. Maybe I should make this a little bigger. Sorry. There we go. So I also use previous weekly high, previous daily high, previous daily low, weekly open and monthly open. Those levels are just there as a kind of like a placeholder, because sometimes I see price respond to it and react to it, like you're seeing here. So it could be like a way for me to kind of gauge or measure like my TP, for instance. I'll be mindful of those levels, but my primary levels are the ones that what I just talked about, right? Today on NQ at New York Open, because I always wait for 9:30, I'll only trade till about 12. We had a London low sweep right here, which I'll mark off, London low. And the first thing I did after that, my alert went off, was I immediately double check what the structure looked like, because I want to make sure that there is a turtle soup, right? So if there's a turtle soup, then we're rocking and rolling. We can move on to the next piece of criteria that I have. So there was a liquidity sweep here. Perfect. I can then start to identify where the change of state delivery is located, which is right here. It's another key piece to my system. We're inside of the 9:30 to 10 a.m. macro. I use quarterly theory, micro quarter 2, micro quarter 3 as my macros. There are 2 macros in the morning during New York session. So it's like 9:23 to 10:08, and then the next one is 10:53 to 11:38. And I'm basically looking for the manipulation to occur inside of those 2 windows. And if that happens, then that's perfect. If it happens outside of it, I might give it like a little bit of grace, like within 5 minutes. But if it's outside of that window, there's no trade for me. It's a filter. Because you can't just stare at the screen all day, and you do need to create filters for yourself to keep yourself safe. I talk about this a lot, where I'm always trying to find ways to not be in a trade, right? Because I know how to execute my system, but I need to make sure that I know how to like stay out of trades too, right? I need to find reasons to not be in that trade. So as I go through my checklist, if everything's like checking off, then I just execute like a robot. I just enter, right? Um, So liquidity sweep, change state delivery, we're at a higher time frame POI, which is London low. The final 2 things that I look for are an EMA closure. So I like to see not only price close above the CISD and confirm it, but I want to see the 20 EMA also get closed. Sometimes the 20 EMA will be a little higher, and that's why I'll just wait for that extra bit of confirmation. And then what I do is I market order entry in, right? So in this situation, because the CISD is up here, right here, the EMA is here. I wouldn't enter on this candle. I'd actually set a market entry right at the close of this candle. My stop loss goes at the bottom. Now, there's one piece of this I forgot to mention, which is insanely important, because without it, there's no trade for me, and that is SSMT. Okay, so what I'm looking for with SSMT is a cracking correlation. And SSMT, once again, is just driven through quarterly theory. So anchoring swing points with quarterly theory. The furthest back I'm going to ever go is the 90-minute window, like the previous 90-minute window, which is this red box in this case. So with YM, I know that there's SSMT here, but it's not very clean and very clear, so I won't use it. If I look at what's happening with ES, however, right, ES had a much cleaner SSMT here, and that's why I took the trade. So right here we can see ES has a low and then a higher low, whereas NQ had a low and then a lower low. So it's happening in between quarter 2 and micro quarter 1 inside the same 90-minute quarter. So for me, I'll mark that off as SSMT, and I take the entry, right? And in this situation, I entered and immediately within 5 minutes hit stop loss. So that happens, right? Like, not all trades are gonna work out for you. I think, on average, most people are aiming for at least like a 50% win rate. So, if you're trying to stick to, trading 20 straight trades that are without breaking rules, right? Like a 20 trade challenge, like you're gonna lose 10 of them probably, right? And if you're lucky, you're gonna lose, 8 or maybe 6. That would put you to 60 or 70% win rate, right? Which is not impossible, right? So this is my loss for today. It is what it is. Once that happened, like there's nothing to do, right? You just journal it and move on. I just waited for the next window to form because I know that I have another window of opportunity to trade. So I'm just going to wait for that window to trade. And what happens when I do that is I start to see CL form what would be a long setup that I took. So let me just backtrack here for a sec to where it was. I'll show you that secondary window. Okay, right there. Okay, so here's that second window, right? 1053 to 1138. So once that window opens, I'm looking for manipulation to form at a higher time frame POI. So you can see that price did manipulate here, right? Right? It did manipulate. Where is the POI of interest? Let's find out. So I believe it was an hourly level that I played off of. There's an hourly level right here, right? So, but I think I used a lower one. So there's an hourly level there. I'm just gonna go this way. I want to double check something. So there's an hourly level here, and that's all I'm really doing is I'm just marking these levels off when I show up to work basically here, and set alerts and wait for them to fire off, right? So in this situation, we got a sweep here, right? But then we got a sweep on this one. So when I go down to the lower time frame now, I want to see what's happening. So when price originally swept this level inside the first manipulation window, it didn't get the setup I wanted, right? The thing is, I'll still use the same level if I still get another manipulation sweep, and that level, which is the higher time frame level, is actually reclaimed. So in this case, it got reclaimed. And we did have a turtle soup. So you could say like, this level right here is your turtle soup. And then here's my change state of delivery right here. Now, I used to trade limit entry orders off the CISD. So like if we got confirmation, I would set like a limit order here. But what I found was happening was I was getting front run quite a lot, similar to like what you're seeing here, right? And then the trade would go where I expected it to go or where I wanted it to go. And this is why I brought in the 20 EMA to help me out, because if I start to get that closure above the change state delivery, and then I get a closure above the 20 EMA, it's an easy market order entry right here, and I'm literally just aiming for 2R. I don't really go for anything beyond that. And here's the 2R. So in that previous trade with NQ, where price immediately went against me, the opposite of that is the price going in my favor, right? It can do that too. And this is why I'm kind of like numb to all this now, because I know what my system looks like and how I want to trade it. I've already showed you now how I do it. This is what I do. It's just I have two sessions, or sorry, two macro kill zones I'm looking at inside of the larger kill zone, which is the New York AM session, and I'm trading CL, GC, and NQ. And if I don't see any sort of a setup, then I don't trade. It's basically that simple. And I'll be honest, like I have not taken many trades over the past 2 weeks, surprisingly for myself. Like I usually at least take one trade a day, if not a few a week. And to see, like I'm only taking one trade in a week was like, whoa. Being able to sit on your hands and not trade is insanely hard, because there is a urge to trade, because you are showing up, right? You're showing up, and if you're passionate about it, you're going to naturally have some emotions that you're ready to trade. You want to. It's like like a hockey player that gets dressed and is on the bench, and there's four lines, and that player might not be on the first line. They're on the third line. But guess what? That third liner is just waiting for the coach to tap them on the back so they can hop in and play, right? They're just like waiting for that. That's how I feel with trading. Is like, and maybe it's because I'm an ex-hockey player. Like, I just want to like get tagged in. I want the coach to tap me and it was like jumping on the ice and skate my ass off and score a goal kind of thing. But with trading, obviously that is not going to help me, right? Being that emotional is not going to help me. And that ties into the next piece of conversation. But before we do that, if anyone has any questions, feel free to, once again, drop your questions in the chat. I know there's some conversation going on about ICT and stuff, but that's cool. It's all good. I'm just going to keep going on. So the next topic of conversation is the trader who wins next year is the one who fixes this. So what is this? Okay, 2026 edge. The edge is not a strategy. There's no secret here. There's no, like someone is not coming to save you this way. The only person that's coming to save you is yourself, and it's a mindset upgrade. Okay, so there are 3 pillars that I was looking into, and I was doing a lot of studying on this this past couple weeks, truth be told, and it aligns with a lot of what I'm going to talk about as we move on with this deck. And so the first pillar is decision quality, right? That's what this is, right? The ability to have sound decisions, and we talk about trading A+ setups. That is the edge, believe it or not. It really is that simple, but it is really, really hard to do, right? Simple in theory, hard in practicality. Okay. The second pillar is execution discipline, and the third is emotional neutrality. Okay, so what does all that mean? Well, decision quality, what this means is like with results. So if you're someone who is, trading off the seat of their pants, like a pattern trader, right? So let's just use the example of a unicorn, right? Unicorns form all over the place. But if you don't align those unicorns with, other types of confluences, like a higher time frame alignment or a POI, you're just kind of trading what you see. When you start to like journal those results, so what happens is these results become a lagging indicator because all those decisions that you made when you took that trade were all made under pressure. Okay, and remember, we're talking about the quality of your decision making. So good decisions will obviously lead to consistent outcomes, right? We're going to talk about that in a sec. So if you're able to fix the quality of your decision itself that you use to enter a trade or exit a trade, what happens is your results are going to fix themselves. Okay? Because it's going to allow you to trade more consistently. Execution discipline. So when it comes to execution discipline, I showed you how with Bitcoin, for example, how this trade fits a lot of my criteria. The only piece that's missing is the SMT or the SSMT. And because it's missing, right, I'm not going to enter it. This is telling me no almost trades. That is an almost trade. All my rules apply except for one, or my criteria. If I took that trade, I'm breaking my trading system by one little thing. That's an almost trade, right? I can't bend the rules just because I want to be active, right? So like with NQ, for example, let's go back to what ends up happening, which is, this actually happened today. It was a good test, truth be told, because what I saw was a V-shaped recovery, right? Price had a V-shaped recovery, but here's the problem for me and my system is I'm looking for ERLs on the hourly and the 4-hour, right? But when I look at what price was doing, it was moving into IRLs, and I personally don't trade off IRLs, right? So I analyze IRLs. I analyze whatever price is doing. However, I don't trade off them. So I'll show you what I mean. So like as I'm watching price ping the CE of the FEG, which is a whole other thing in itself. Once again, CEs, very important. I don't see my setup here, right? I see a V-shaped recovery. I see an IFEG model setup, right? If we're looking at like, if you want to use the IFEG indicator by Toodegrees, I'm sure this will pop up as being a valid setup, right? Maybe there was a forever model setup here too. I'm not sure, right? You could try that indicator out to learn more about it too. That's what I used to do. But for me, I know that this is not my criteria. So like I was sat here and I watched this and I don't know what's going to happen, but I just watched it play out. And sure enough, we've had a massive recovery, right? Look at that. So I'm not bending the rules just to be active, right? I'm not going to jump into that trade just because I took a loss, right? And the other thing too is like a lot of times us traders will think that the setup is like perfectly going to happen. Like, and what we do is we then front run the entry. And I'm here to tell you that is like the worst thing you could do. Do not front run your entries, especially if you have criteria in place, right? So if you're someone who is using a unicorn model and you're trading off the breaker block, and your strategy is one where you have a limit entry on the breaker block, front running it would mean that you would be entering either on the breakout with a market entry, or you'd be entering while price was still inside the breaker block before it confirmed the actual unicorn itself, which is an FVG displacing inside of the breaker block itself, right? So you have to ask yourself that question, like, what is my entry criteria? So for me, I used to take, like I said, um, I used to take CISD limit order entries. So for me, taking a market order entry would be breaking my rules, right? I would be front running my entry. But what happens is when you start to journal your trades with, with when you're using like a mechanical approach, right? Like a pre-planned approach, I start to then understand that I'm missing out on a lot of good trades simply because I'm using a limit order entry, and that I need to adjust to get into the trades that I know are going to work out for me. So that's why I utilize now a market order entry, right? And there's nothing wrong with doing that because I'm not front running, I'm sticking to my system. That is my system. Emotional neutrality. What does that mean? No fear, no greed, no tilt. Can you show up to the market every single day to trade and be neutral? Can you keep your emotions in check? We're going to talk about how you do this. Okay, so you don't want to be trading from a place of fear or anger or FOMO, right? Maybe you got 2 hours of sleep last night. Do you really want to be trading while you're not, in full, rhythm within yourself, right? The other thing too is like, let's say you took a loss, like I did. I took a loss on NQ here, right? Okay, so this is like a $500 loss that I took. And if I go back to the deck, it says you're not changing risk sizing after wins or losses. Now I took that loss. Am I going to now change my risk size to make up for that loss? So am I going to risk $1,000 now? No. Am I going to risk $250 now? No, I'm not. I'm going to continue to risk $500, right? Because that is my risk. That is my risk per trade. Now you can have daily limits. Some people say if I take one loss in a day, that's it, I'm done, right? So some people took a loss today on NQ and they stopped trading. But for me, that's not part of my trading system, right? I only trade 3 assets and I only have 2 windows of operation. So I can already tell immediately if I'm going to be even in another trade. So usually for me, I would say $1,000 is probably the limit, which is about 2 trades roughly. So when I took that CL trade, I already knew that was going to be the last trade I take. So I'm either going to be a winner or a loser. And because that was a winner, right? Instead of risking less than that, you risk the same amount. And now instead of being -1, you're at +1 for the day, right? But that's all because I'm not changing the risk. And then staying consistent through the volatility shifts. What does that mean? Well, it means, like, here's a great example. Like, price dipped into the H1 ERL here in that first that first manipulation window and didn't give me the setup, right? And then you have consolidation, but I stuck with it, right? I stuck with it. I stayed consistent through that volatility, and I just waited for my edge to appear. And once it appeared, I mechanically entered that trade, which I would have done any other time. Okay. Just checking the chat. So in essence, there is no A or A plus setup in your rules. If you trade, it's one trade setup, A plus, otherwise no trade. Yeah, exactly. Right. Like if I have 5 rules, like criteria, I'll show you what I mean. One sec. Let me pull it over. So let this load up. I'll pull this over here. Okay. You can see this, right? So every day when I show up to trade, Okay, when I show up to trade every single day, I have this checklist up in front of me, and it's basically a part of my game plan, right? You know, when you have, if someone owns a business, they have a business plan. Well, this is an extension of my business plan. But I show up every day with this checklist on the side, and I just check it off, right? So this is the latest thing I checked off, which is that CL trade, right? So what are my assets? Well, I traded CL. There was no news. It's inside of the 9:30 to 12 window. It's inside the second manipulation window. It was below both of those levels, which means my bias is bullish. And then what was my PD array? There was an H1 ERL. SSMT was with the 90-minute range, not the micro. And then in terms of what you're talking about with A or A plus, I don't look at it that way, exactly like you said, because I need all of these to check off. I need a lower time frame liquidity sweep, aka turtle soup. I need SSMT to be confirmed with the correlated asset. I need to see a confirmed CISD, and then I need to see price break through that EMA 20. If I see all that, I enter. And I think what it does is it takes away a lot of the intuition that people think you need to have when you're trading. And you can use a different type of intuition. Because a lot of times I see people talk about, and at least what I used to see when I was learning, they would talk about how, you know, by having, you know, experience by showing up on the charts, they gain this intuition to know how to trade, right? Know when to enter, when to exit. But for me, I think that there's like that type of trading doesn't work for me. It's too discretionary, right? Some people thrive on that, no doubt. But for people who are, you know, requiring more of a mechanical approach, you need to have things pre-planned. Like you need to have your system laid out for you before you enter, you know, the ring. Now, here's the thing about the prop firms, because it ties into a lot about what we're talking about with the mindset, right? Your edge is in your decision, right? Your quality of your decision making. Okay, but here's the thing with prop firms, because I think that there's an equal part that weighs in on our psyche, because there's all these rules we have to follow. You know, my fund of futures has end of day trailing drawdown. Apex has intraday trailing drawdown. And I'll be honest with you, I did not understand what the difference was until I had a bunch of Apex accounts and I started copy trading them, and then I started seeing the trailing drawdown just going way lower than I thought it should have gone, because, well, guess what? It's trailing intraday. It's not end of day. So if I risk $500 on that trade and it goes pretty much close to TP but doesn't hit TP and then goes to stop loss, I've not my drawdown is not minus 500 anymore. It's probably closer to minus 1,000, and that was happening. And I was like, that's really messing my psyche up. So I learned from just that experience that end of day trailing drawdown works better for me. Now I'll be honest, like Apex is very, very attractive in the sense that they offer so much capital, 20 accounts. So it's possible to obviously consider using them, but you have to really understand that risk and how to ultimately trade that trailing intraday drawdown, because that can be a real pain in the ass. But I'll sidestep, because hidden truths about prop firms and what they want from you. Now you're probably thinking, well, what they want from you is your money. Of course they want your money. It's a business. But what are they really looking for? Well, the hidden truth, number one, is that they're depending on high failure rates. They want you to fail, but it's not malicious. That's the truth number two. That's their business model. They need you to fail. They put all those sales. We're seeing all these sales right now, like because it's Black Friday deals. Like there's some good deals out there. And truth be told, when you're looking to get prop firm accounts, you want to buy them on deals like this. You don't want to pay full price for them, because that's ridiculous, right? There's always a deal. And now they're actually fighting with one another, because they're trying to get as many people on their platform as possible, right? And the third truth is that a weak trader psychology is the main reason for people failing these accounts. I've failed too many accounts. And when I think about it, psychology was 100% the problem. It wasn't the skill, right? It was the psychology. I'd break rules. I'd force trades. I'll even be honest with you. Like when I was learning even about the unicorn, if I saw Ash take a trade, but I didn't understand the trade, but I was still learning, I took the trade anyways. And guess what? It would go to stop loss. And it was just the one trade that went to stop loss. But then the next time he would take a trade, I wouldn't take it, and that would go to TP. You see how it can impact your psychology? So prop firms are really, really relying on us to fail. And if you notice, they keep putting new rules to make things harder for us, right? And this is what leads to how you can avoid falling into that trap. Okay. And we're going to talk about that. So, trader discovery. Why are you a loser? I don't mean it like you're a loser. Just mean like, why are you losing in your trades? So once again, most traders lose from psychological, not strategic, technical reasons, right? Passing isn't about a better strategy or having more experience or even more discipline. It's literally about the quality of your decision making, okay, and being like pre-planned. So share trade of consistent passers, they have detached emotionally from the outcome of the trade. So today, I'll give you an example. Inside Unicorn University, Ash took a trade. There was a unicorn on ES. He took the trade. I also took a trade on NQ, like I showed you. So it was a very similar trade. And he lost, I lost. There's a whole bunch of people that lost that are even outside of Unicorn University. I see it on social media. And the difference is, I like listening to Ash during the live stream. It was like, it's okay. That happens. It's okay. He's completely detached emotionally from that outcome because he understands that he has a 50% win rate and that he's not going to win 100% of the time. And this was just one of those losses that are going to happen. It is what it is. At least it came fast, right? At least it came fast. The worst thing to see is price like move higher, get close to your TP, and then completely dump on you because Trump put a tweet out or something like that, right? Like those kinds of losses suck. But this one was like super fast. So there's two groups. I like to use the 80-20 rule. Okay. So in this situation, 80% of people who are failing over leveraged, they're revenge trading after they lose. They're getting greedy, thinking they can hold their position longer without taking any TP because they're trying to really maximize their wins. And they're definitely breaking rules, right? Especially when they're not able to regulate themselves emotionally. On the other side, 20% of the people who are actually like not failing, they're like robots. They're like soldiers. They risk the same amount every trade. They don't have, it's not to say that they have no emotions, but what it is they know how to manage their emotions. So it looks like they have zero emotional reactions, right? And their process is mechanical and it's repeatable. This is kind of like what I was showing you with my system is, and the way I kind of reverse engineered it was I put concepts together that made sense to me. And I realized, by trading C2 unicorns, studying with Day Trading Realtor, studying with the unicorn model with Ash Trades, I started understanding that I was actually a reversal trader and I'm not a continuation trader. So if you think of concepts using like the TTFM indicator, which is T-Trade's thing, there's a C2 candle, there's a C3 candle, right? A lot of people talk about waiting for C2 to confirm. So that's the reversal, that's the manipulation, and just jumping on the train, which is your C3, right? Which is your distribution, right? So if you look at PO3, accumulation, manipulation, distribution, a lot of times people will say, hey, it's just easier to jump on the distribution, right? Just jump on the train. It's already going, right? But for me, I actually, that doesn't make sense to me to do it. Like I can't do that. I need to trade the reversal, which means I need to trade the C2 candle, which means I need to trade the manipulation. It's possible to do this, but there still has to be mechanics involved. There still has to be repeatable executions. That doesn't change whether you're trading a C3 candle or you're trading a C2 candle. It doesn't matter. Okay. So the 80% that are failing, they obviously have lower pass rates, right? They're emotional. They're making emotional decision making, and they're actually trading on instinct, right? They don't have a set, like I showed you my checklist. There's nothing emotional about this. Like if I look at my chart and I see that it's doing this or that I needed to do this, and this, if I don't have one of these checked off, that means it's not doing something on my list that I needed to do. So there's really no emotions. I think the only emotion I feel is the pressure, which is normal because if you're trading on the 1 minute time frame, right? Things are moving very quickly on the 1 minute time frame. So for me, I don't have much time to get in a trade. And this is a great example where, I get confirmation at 10:59, and I literally have a minute or two to get in on this trade, and then it's gone. Okay, so going back to this, I'm not trading on instinct per se. I'm trading based off of predetermined decisions. So people who are in that 20% range, they are going to have a higher pass rate, right? They have removed emotional decision making in their day. And once again, they're operating from a predetermined set of decisions. And those decisions have already been made when there's no pressure, they're thinking logically, their emotions are in check. Um, that's why I have a checklist, because I made that checklist when I was not super emotional. I was 100% logical, and I've done enough back testing and forward testing to know that that's the criteria I want to use to trade. So the core insight about all this, your brain is going to collapse under real-time pressure. That's the point. When you see price, sweeping lows, and then you're like, okay, I got to get ready, there's a lot of pressure that starts to build, right? And humans can't make optimal decisions when they're under emotional duress, okay? It's a human nature thing. You can go look it up. It's there. Um, Winners are going to make every decision even before they click the buy and sell button. What does that mean? It means this. That all of this, that's what that refers to. I already know what I need to see. Of course, it takes practice to get used to it, get familiar with your system, but think of it like a quarterback or other players on a football team, right? Every week they got to learn new plays, right? They got to be mechanical when they make those plays because it's the run, right? Even if they get blocked, that's okay. They still have to run the same play, right? Because the quarterback is going to be looking for them to, you know, either run for a Hail Mary or, do some sort of like a left hook type play or something like that. I don't have the terminology down, but you get my point, right? So when you start to do this, the system is trading, not you. You're actually just executing that system. And what does pre-planning look like? Okay, well, let's say before the session begins, you already know when the price is starting to make its move, you know where your entry criteria is. It's defined. Your stop loss is already fixed. Your TP is fixed. It's already predetermined. Even your position size is already set. You already know, I'm only going to risk $100. I'm only going to risk $500, right? And your market conditions for the entry are already established. And what does that mean? It just means, like, if we look at that CL trade once again, for me, I already knew I was long because of my bias, right? Price was below midnight and 7:30. I got pinged on an H1 ERL, so the market conditions are already telling me that I'm going long, and I just need things to line up for that long to happen. And sure enough, one by one, the factors or the criteria start to check off. Here's the liquidity sweep. Once I get that liquidity sweep, the CISD becomes visible. Because you can only get a CISD, in my opinion, when there's a liquidity sweep that happens before it. And then once I get that, I already am just waiting to hit the buy and sell button because I already know where my stop loss is going to be. It's right here. And I already know where my TP is going to be. It's going to be somewhere up here, right? My market order entry is going to be the second I get that closure above the 20 EMA. It's extremely mechanical. Is it a 100% win rate? No, it's definitely not. So the difference when you're pre-planning is all of those factors are already set in place for you. So when you're trading, it's just like this. You're literally on hands off. You're on. It's like there's no thinking involved. You're not debating what you're seeing. You're not needing to adjust. You're just executing. You're executing that plan. So whatever system you're using, you got to try to figure out a way to build a plan around that. So it doesn't have to be complicated. I'll give you an example. I was helping someone out in regards to London session. So I'll give you guys a little something here. So a little trick with London session. I wish I could trade London session, but I can't. NQ, London session, one of the most simple things you can do is just trading off of Asia high, Asia low. Like that's it. Asia high, Asia low. It's really, you could just trade literally off of that. So what does that look like? Well, give me an example. You have your kill zone, 2 a.m. to 5 a.m. roughly. Is this always going to happen like this? Probably not. You got to backtest this too, but it's just going to show you simple approaches and how mechanical it can be. Okay, I'm waiting for Asia to get swept. Done. Now, in terms of like your entry function, maybe your entry function is a CISD confirmation. Maybe it's an order block confirmation. But the whole point is to figure out your entry function off of that sweep and ride it for 2R. You can see there's a clear setup here, however you want to take it, right? Maybe it's an order block setup in this case. If we go a little bit lower, price then sweeps Asia low, still inside of the kill zone. So let's say you didn't take this trade because you're looking for a liquidity sweep, which we don't really see here, right? Like it's just an order block entry. Price just impulses higher and then impulses lower. But here you have that sweep. So if you want that sweep in a CISD, well, there's your sweep. There's your CISD. Right? Maybe your market order entry. Like that. Aim for 2R. You're out in like minutes. And it can be literally that simple. Josh has dropped some awesome info in the chat there. SMT at Asia high low with a CISD or IFVG, burn butter. Yeah. But the thing is, you got to figure out which way or which road kind of works for you, right? He says north of 65% of the time, Asia highs and lows both get swept. And that's not a model probability, but rather liquidity, neutralization, expectancy. So that's pretty good odds, right? And remember, as traders, we're trying to set ourselves up in the highest of probabilities, right? To trade the highest of probabilities. So it can literally be that simple. It doesn't have to be complicated, but it has to make sense to you, and it has to be something that you're able to do inside and out every single day, like a robot. And I know we're human beings and it's hard to be a robot, but with trading, you really have to be a robot. Because there's so many different factors that come into play in our head, like confirmation biases, that it will literally deter you from your success. Okay, so just like this picture, right? Hands-free, literally hands-free mode. All the work is done at sunrise. Okay, so why are prop firms not teaching this? They teach a whole bunch of other shit. I see, like they have YouTube things, and once again, there's no judgment here. I'm just talking from my own opinions, but I see them teach about a lot of things, but there's other things they just don't teach, right? And we always see this with social media, whether it's on, I mean, I've kind of started studying Instagram just to see like what kind of nonsense is out there. And I was just like, I couldn't believe what I was seeing. Like just secret strategies, like crazy high win rate models, 90% win rate. Like I was like, what? What has a 90% win rate? That's crazy. And then of course, when I start to study what they're actually doing, I'm like, there's no 90% win rate here. Like this is a bunch of bullshit. So it's human nature that, traders are going to want a secret strategy, right? Or like something with a high win rate model. I notice this a lot with people who are new at trading. The first question they always ask when they're learning off of another trader is, what's your win rate? And to me, that tells me a lot about where that trader is in their journey. And it's not a knock on them. It's just, I just know where they are in their journey because I know what's important to them. And the thing is, understanding like what the win rate is the least of someone's problems. Like that's the last thing you need to worry about. So prop firms, they don't want to hear that. Oh, sorry, traders don't want to hear the success is actually more about planning than showing up to trade and trading a pattern, right? I've marked it down here as like a real-time discipline, but that means just like showing up and trying to be disciplined in the moment, right? It's very, very hard to do that. It's easier to do that when you have a plan with you. So prop firms are obviously profiting from emotional trading. And once again, using 80-20 rule, 80% are failing because they make more decisions under pressure versus with pre-planning and predetermined decision making. So this kind of all comes back to what we talked about at the top, which is about, let's go back to the top for a sec, where we talked about the trader who wins next year is the one who fixes this, right? This is the quality of your decision making, the discipline in your execution, and the ability to stay emotionally neutral, right? So if we go back to now the final takeaways here, if you're feeling like you're blowing accounts a lot, if you feel like you've hit a rut, check your psychology, check your mindset, right? So in my opinion, if you're going to continue to pass challenges and remain funded in the long term, you need to find a way to be able to make decisions before you get under pressure. And you need to be able to execute your plan while you're in those pressured moments. Because that's all it should be, right? You need to be able to remove your emotions and the decisions that come with it entirely in that moment. And once again, just letting your system do the trading. You just got to execute and follow it. Whether it's a win or a loss, doesn't matter. So by pre-planning, this is going to equal consistent performance. And if you're making decisions under pressure, this is going to lead to emotional failure. And I'm not trying to make this sound all doom and gloom. I'm just trying to bring awareness that, learning a model or a concept or, applying X amount of indicators on your chart, while indicators can be helpful and provide some sort of an efficiency, if you don't have the foundation rock solid, you're just setting yourself up for failure. And you really need to do that. And a lot of that, like that battle starts in the mind, just like anything. Even if you're someone that wants to, let's say you're overweight and you're like, or maybe you're eating unhealthy and it's like, hey, I got to get back into good health. So I need to, go to the gym. I need to start eating better. It starts in the mind, because just saying it is not going to make that change, right? The mind has to believe it. You already have to make those decisions before you even go to the gym, right? Like if I'm going to the gym and I know I have, let's say leg day. Everybody hates leg day, but if you go into the idea knowing that, oh, hey, it's Wednesday, I got to do leg day on Wednesday, and you already know what your exercises are, you've already made the decisions, right? You've already, like, the battle's already won in your mind if you can win that battle in your mind before you even show up to the gym. Because once you get there, you're just executing now. Because you already know mentally you're prepared, you're there, right? Same thing with trading. It's the same thing. Just switch out the variables. So with that being said, I appreciate everybody's time today. That's basically what I got for you today. It was just a big conversation about mindset, about what I believe my edge is going to be in 2026, and I wanted to share that with everybody. I've made a lot of stupid mistakes this year. I'm not going to lie. And that's what's kind of led me towards this topic, because I was trying to study and learn more about the mindset piece. There's amazing books out there that you could read to help you. Best Loser Wins is a very popular book people talk about. I've read that one. It's amazing. People talk about trading in the zone. Another one I would mention to people is, what was that book called? One second. Let me see if I can find it. Psycho Cybernetics. That's the book. Super crazy book. Psycho Cybernetics. Highly recommend people to check this one out. I think the author's name is Maxwell Maltz. So check that out for sure. It's we gotta build strength in our mindset before we even show up on a chart. And it's one thing to backtest, But when you're trading live, everything gets thrown out the window. And I'm sure it's cliche to say this, but I'm sure everyone knows when you're back testing, you're like hitting home runs. You're on top of the world. You're like, wow, my trading system's the best. And then you go to do it live and you start blowing up your challenge accounts and you start blowing up your funded accounts because it's a very different scenario. So work on the mindset, figure out those criteria to your system like I showed you with mine. I'll even show you some more stuff and it's not so that it's not about copying this because everybody knows these things, right? Everyone knows what PD arrays are. It's just you have to figure out which PD arrays work best for you, right? These concepts, like I said, I just kind of put them together because as a reversal trader, I had to look at what were the most important things to me to try to figure out where that reversal is going to occur, right? So using key higher time frame POIs, using session highs and lows, using previous daily low, previous weekly low, previous daily high, previous weekly high, that kind of stuff. Even using the New York low of the day, right? Because sometimes you'll get that low form at just before 11, and then the window closes, but then it gets swept, and that can also be considered like an H1 ERL, for example, right? It could work out that way, depending on the time that low forms. And then if I show you what I mean by having a game plan, right? Like I've tested all types of stuff, and while I was testing all these things out, I was making my notes on what the strategy is, right? Because I believe you got to make that game plan. So for me, this is my bread and butter model, but this is my game plan. Like I would throw this back to you and ask and say, do you have a game plan on paper, on Notion, on Excel, on Word, wherever? Do you have something, right? Like it's like a Bible. So whenever I have questions about what I'm doing or what I'm seeing, I can go back to this and go, am I actually breaking a rule or am I not breaking a rule? So I put all this together with notes. I would also say, like you got ChatGPT right there to help you, like put things together. I mean, if I had ChatGPT when I was younger, holy moly, how much time I would have saved. So a lot of what I've done is I have a lot of notes that I made, and then I just fed it into ChatGPT and asked for it to basically spit something out that's more coherent. And then what I did was I took that and I re-edited it, and then I end up with something like this. I have like a playbook I can go back to, right? Even mindset. The structure, timing, or confirmation isn't clear. Skip the trade. Like I have to put that in there. It sounds stupid, but this is what we're talking about. You have to be pre-planned. You can't have something like this be a in-process type decision. Even saying something like, there's always another trade around the corner. Try telling yourself that after you take a loss and you're on tilt. Clarity is more important than frequency. Only take setups that fully meet your criteria. Don't FOMO, panic, and force any trades. We have to constantly tell ourselves the good stuff because then it starts to override any sort of doubt that we may have, and it quiets the other part of our brain that just keeps, or the other voice in our brain that keeps talking to us, telling us to do the things we know we shouldn't do, right? We consider like, people with those cartoons, they have like the devil on one side and the angel on the other. It's like that. So once again, I appreciate everybody's time today. I am Trader Xkira. I'm on social media. You can find me on Twitter, Instagram. I've just started, I guess, a YouTube channel, like to share some stuff. I'm obviously on Discord. I will not message you first. So if you want to talk to me, just message me. If you have a problem messaging me, you can ping me inside of the discourse inside of the Discord that I'm in it. If it won't let you, but just add me as a friend either. Yeah. And I appreciate everybody's time, honestly, because I know we're all busy and we all got things to do. So, and Josh, thanks once again for having me, man. I really appreciate it.
Our pleasure.
Love
It
you
really is
guys.
our pleasure. Every single time that you come on here, it's a meaningful discussion. It's a great discussion, and I am highly appreciative of you taking the time to even do these slides as well. Shows a lot of care, and you always are looking out for people that want to better themselves, and that's something that's very admirable. So
Thanks,
appreciate
bud.
that a lot.
And I will drop the PDF link in the chat after. So if anyone
Awesome,
wants a copy of it, you can have it.
awesome, awesome. All right. Is there any other further questions for Kira? Just let us know, and we'll probably close it up within a minute or two. Um,
I appreciate
and
everyone's warm
we'll-
words, by the way. I really appreciate it. It's really, really awesome. And I personally don't have anything for sale. Um, I'm I just want to be a part of, good communities. I believe in just helping other people out as much as I can. So if you need help and you want my help, I'm a message away, honestly. Because trading can be a very, very lonely journey, and I really don't want anything from you. All I want to do is help people. So I just want to leave it at that.
Appreciate it. Appreciate it. All right. Doesn't look like there's any other questions, but there's a lot of love in the chat, so we appreciate everyone as well. And yeah, we'll definitely we'll schedule another live stream, and whether it be in December or January, we look forward to hearing from you and wishing everybody a happy holidays that's coming up and Thanksgiving in the States.